What we're gonna do right here is go back, way back into time.
What's up, people? It is the end of May. For all of you over there on the East Coast, June has already begun for me. Over here, it is 4:25 a.m. Monday, June 1, where I am sitting, while it is 4:25 p.m. over there on the East Coast. For all of you who will be enjoying the full moon tonight, I hope that you enjoy that. And that banger of an intro brings us back to the Beastie Boys. The Beastie Boys signed with Def Jam Records back in 1985. I went to the Beastie Boys concert in 86, the License to Ill concert. It was fucking epic. Epic. Never forget it. First concert, so obviously it was epic. But yeah, they signed in 1985. And what a lot of people don't know is they kind of gained a little bit of popularity because they were opening up for Madonna in her Like a Virgin tour back then in 1985. But yeah, back in 1985, you guys remember, unwrapping these, cassette tape fucking containers and getting your Memorex or your TDK, cassette out and throwing it into your little boom box so that you could record music, then put it over there into your Sony Walkman because you were, one of the hippest guys out there. Whitney Houston, her debut album came out in 1985. This was prior to, Bobby Brown and, how she, rest in peace, got all fucked up because, goddamn, what a amazing voice that we will never see replicated. But yeah, 1985, Miami Vice, their first season wrapped up. They were getting ready to start season 2, and hey man, I was actually in one of the episodes as a extra, but yeah, having the Don Johnson white with the pink shirt, you guys have, and yeah, fuck, I can't remember the name of the shoes that we used to wear back then. Oh, but you all who didn't grow up in Miami and South Florida, you have no idea what you missed out on back then in the 80s. Here was 1985 was your famous best concert ever in the world performance by Queen, where they performed over at Live Aid back in 1985. And Calvin and Hobbes actually debuted in 1985. This was their very first ever their first cartoon right here. A lot of you, though, that had not yet gotten into chicks, because maybe you were a little bit too young, even me, I was just turning 13 in 1985. Super Mario Brothers came out back in 1985. God, you remember this? And then you come over here and ta-dink, 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 and the mushroom comes out and you enlarge Super Mario. Yeah. Brings back memories, huh? A lot of us, though, not many people, had Windows 1.0. Windows 1.0 came out there in 1985 as well. That's right. Remember, as you see over here on the left, didn't have those 3.5-inch hard disks. We had those 5.25-inch floppy disks. Ugh. I remember that being in 8th grade. And Ronald Reagan was going into his second term, one of the greatest speakers of our lifetime. Even though my father was a Republican, I was a first-generation American. I was a born Republican simply due to the charisma in the speeches that Ronald Reagan would give. And that carried forward into the, Bush, but those guys had no ability to speak like Ronald Reagan. Obama was the closest one. And I got nothing bad to say about Obama whatsoever. But yeah, Ronald Reagan, back in 1985, getting his second term, and Back to the Future was your movie. At the movie theater. And yeah, I got some stories to tell about that. But yeah, back there in 1985, I got my first job. My first job ever. I just turned 13. I was 12 years old, turning 13. I lied. I said I was 14. Got my first job there at 15th Street Fisheries as a food runner. Back then, the labor laws said that, somebody at the minimum age of 14 in order to be employed, but maximum work was allowed to be was 20 hours. And because we had time clocks that we punched, all of us kids that worked there, we would punch each other's time clocks, so we'd wind up getting paychecks for like 30, 31 hours, even though we're only allowed to work 20 hours. But yeah, right over here, I don't know if you can see the mouse moving, but on this little deck that comes out, I remember those were tables 60 through 70, right there on that desk, on that deck. Second floor, that's the restaurant. Downstairs was a bar. I got laid my first time. 13 years old. Right there in that fucking part of the restaurant. Right there. Got laid. And a lot of you also got laid when? September 1985, to celebrate my birthday. Penthouse and Playboy both come out with Madonna. Now, some of you, your parents hadn't even had sex yet, so you're too young to know anything about what we're talking about here. But the reason why I'm bringing you all to this is because that's where we're at. Having now closed 9 consecutive green weeks in a row on the SPX, not on the NASDAQ, not on the Russell, not on the Dow, but on the SPX only, we are back to 1985. 1985 was the last time this took place. 1985, you had 12 green weeks in a row, and the 1987 crash, which was a year and a half later, almost 2 years later, because it happened in October, came down right around to the top, right here around 215. In fact, if I recall, the 1987 bottom is 217 or 218. So right there, that's where the crash in 1987 came down to. Boom, 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 boom. But the point being, we are back to levels, not levels, we are back into data areas that we have not been to since 1985. So where are we? Well, let's take a look. First and foremost, we got big for me, big blinking alarm over there on Friday. Not because we had our 9th green week in a row. Not at all. Not because we had our 2nd green month in a row. Not at all. But because we ended the day over there on Friday, May 29th, we ended the day greater than plus 10% year to date from when we began the year. That is for me personally, that is a big blinking radar screaming alarm right there. For this bounce coming off of March, we're up 20.3%. Another second big blinking boom alarm coming in right there. And even though we hit 75.99.38, as you remember when I sent out your email there on starting of the week with SPX 8 green weeks, NQ 30,000 having already been reached, and I congratulate a lot of you who are starting to adapt over to the NQ. And believe me, your learning curve is very easily paid for with the profits that you make on it, but it is something that you will start to enjoy much greater than the limitations that you have on the SPX. Not saying the SPX is gone, but I'm just saying for those of you that have never been exposed to it because of these just absolute absurdity that we've had on the SPX, it's there. So like I shared for you on your email last week, a week ago, 8 green weeks in a row, and highlighting all of the occurrences when we had greater than 5. August 2025, 2024, September, June, looking back at all of these so that you've got more than adequate time to go back and look at them yourself with your own eyes and see what it is that we've had, see what it is that has occurred. And like I shared, so 9 is not impossible. And that's exactly what we wound up getting. And we went up to that 75, 54, 53 earlier in the week. I had highlighted there 76, 43, 41, which is going to be highlighted for this week. But as I shared for you there on, when was that, Wednesday, talking about that with the technical talk. So with last week's 73, 33, 68 perfection prior to NVIDIA earnings, SPX displays best for wave 5 in progress within the middle of what views best as wave 3 of wave 5, which is the strongest of all waves, the third one. The ideal target zone is that 76, 43, 41. However, 75, 35, 07 was so easy and significant yesterday, the day prior, because of what we were looking at, So again, it comes out that note that wave 5 of wave 5, assuming standard fib extensions, can only target 75.93, so be aware of this. Those who have become accustomed to the credit spread trade due to the multiple week melt up. 1 cup of coffee, 4:30 in the morning, I'm doing my best. So in summary, be aware of 75.93 above. That's exactly what we got there. Over there on, where are you? Did I close you? I did not close you. I knew I didn't close you. That's what we got there over on Friday. Up to 75.99, down to actually fill the gap almost to the penny, and then Trump came out with the news, or somebody came out with the news. Trump said the memorandum of understanding, the Iran with the Strait of Hormuz is going to reopen again for the 19th time in I don't know how many weeks, and I stopped counting because none of it matters, because I called this bounce. I called the ceasefire bounce coming in late March. Said we're going to get a ceasefire bounce. We're going to get a ceasefire bounce. And I was a week, 10 days early for it happening. Kept harping about that 65.21, 65.21, 65.21. Well, I didn't put it up here. I know I don't have it up here, but I will share it to you in a little bit where I'm looking at from a downside point of view. Now here, again, data. The SPX has not had a red June except once in the last 10 years. Once. And if I recall, I believe that was back in 2022. If I recall, that was back in 2022. Now you have had some dips where you have broken down below quite often. But to have a red month, it's only happened once in the last 10 years. Now what we have, and I completely forgot about, is we have a holiday on OPEX week. So OPEX week is going to be a shortened week because it's Juneteenth. Now, as we progress closer to that, I am sure blonde hair, blue eye preferred comments are going to be coming out from the HNIC that, why do we have a holiday on Juneteenth? Why is the market closed on Juneteenth? And that will then trigger for not the Department of Defense, but the Department of War to come out and do their thing.
Tiptoe through the window, by the window, that is where I'll be. Come tiptoe through the tulips with me.
And yeah, Pete Hegseth was pretty masculine right there. So, the spreads. Man, I've been getting fucking punched in the mouth, kicked in the balls. However, and I'm not saying however like it's a good fucking thing. 12 wins in the month of May. 27 trades, 12 wins, 15 losses. I have never, ever had something like that. But net, still green. 28.68 win per contract, $2,050 loss per contract, $818 net. But this has really screwed up my year-to-date count. And that's going to be a rough process to get that 73.4 win ratio back up above the 80-85 mark, which is where I tend to just naturally be. But yeah, 43 losses on the year. I only had 54 losses all of last year. And we're only through 102 trading sessions. And that was because I kept going for $4 credits, looking for failures. I'm not being bearish. I'm just looking that you can't go up that much higher. You can't go up that much higher. And then Axios, bam, Donald Trump, bam, unscheduled, coming out of nowhere. And here you go, boom, 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 boom. And as we go into Monday, 1, 2, 3, 4, 5, 6, 7, 8, 9. It will have been 9 trading sessions. So Monday being number 10, since we've had our last minus 1% day. So bear that in mind, because like I said, you're going to be enjoying your full moon tonight. I hope you do. We did, and it is absolutely gorgeous. So go out there, take advantage of it, get some fresh air, enjoy the mosquitoes, because summer's here. On to the NQ, and I've got to get my color coordinating down because I did not complete that over here on the month. Up 10.33% on the month for a second green month in a row, which was pretty fucking obvious that it was going to be bouncing after having 2 red months in a row. And again, you did not get a 9 green consecutive week run, only because back here in the middle of May, when we had OPEX, you had that minus red day, and you had that minus 1.43 close. 708.93 is where we closed, having opened at 710.36. That's about the best I can do for short-term dialogue. And here we are, up into 741, 740s, and everybody's looking at me like I'm a lizard. I'm not Yoda, I'm a lizard. And you come over to the IWM. IWM 290 all week long. 287 never came down below that 288 after Monday. Never. But again, 17.28% year to date. Good month, green month, another green month, just like you had the month before after having had 2 red months in a row. And looking at this from a weekly point of view, this needing to, again, be color coordinated so I can see it properly. The color's green there. 1, 2, having had a red week back there during OPEX, May 11th through the 15th, 2 green weeks in a row. So, again, the main attention going into this week is going to be that SPX. The SPX. So, why talk about the SPX, and why not go over and look at the SPX? So let's go ahead and do that. So here we are on the SPX, and for those of you without short-term memory losses, because you were born very near the early 70s, possibly early 80s, so you still have a little bit of non-dementia going. 73, 35, 23. We kept talking about that being the bottom that we're looking for, the bottom. Last week, we got it. Boom, boom. May 19th. From that, on the bounce that we were looking for, we kept looking for our upsides, and our upsides kept getting pierced by fractional points. But what we've got here, from either way that you want to look at it, an A, B, C, where C equals 2 times A, right up there at 75.90, 75.95. And we've got a clean 1, 2, 3, 4, A, B, C, 5 waves up off of that 73, 35, 23, which all together brings us to a very clean wave 3 having completed, and now we are looking for the initial beginnings of a wave 4, which would be a move to the downside over the course of the coming weeks. Can we go higher? Yes. 76.26, primary number 1 upside target above where we topped out here on Monday. Again, full moon is today. Full moon, and I'll get over that in a couple of minutes. Full moon. So yes, 76.2606. Yes, absolutely yes. Can we go higher than that? Well, again, bringing you back here to 1985. As you see, green, 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 green. A little bit of red, a little bit of shippy shaky, and then green on again. So what they are expecting, they being the consensus, they are expecting that we just won't get a green week. That's all. And if we do, you have fractionally higher highs that you can go to. Like I say, SPX 76.26, and I have your other one over here on my other chart, not this chart. This being our weekly view, looking at our green weeks, and I will highlight you with where you are in terms of being overbought. We are only to 88.82 on the weekly, looking at it from an RSI point of view. Just like back here, back in July of 2024, we only got to 89.90. We only got to 89.90 back here in March of 2024. Neither of them will tell you, hey, you know what? You're going to get 3 red weeks in a row. Hey, you know what? You're going to get 3 red weeks in a row. Neither of those will tell you that. Just like our visit over here, where we failed after having 7 green weeks in a row, going into September, into October, it's not going to tell you that at the end of October you're going to get 4 red weeks in a row. It's not going to tell you that. All it's going to tell you here is that you're overbought. That's what it's telling you. What you do with that information is completely and totally up to you. But then I come over here and I show you where we are talking about these big, big upper levels. And here's where I get into the surprise. I haven't gotten any kind of graphics or details on this, but let's just play around with this. I'll try and make it as simple as I possibly can. And I will try and enlarge this. No, I can't enlarge it. So, 1985. That is the last time that we were in this kind of area where we were looking at possibly getting better than 9 green weeks in a row. Well, I'm going to put that backwards. All right? 5891. That's your 1985 written backwards, right? Where my fib comes out to, like I've shared on these bigger, broader views where we're looking at it on the monthly, comes out to 59.6329. All right? 59.6329. Now, all that we are going to be expecting to see is a drop no lower than 6,200. That's the expectation over the coming weeks, that we will not drop below 6,200. Well, me, because, you know, I'm kind of stupid, I'm looking at 58.91. And I'm looking at 58.91 for a number of different reasons. And I've got it marked over here on the full moon calendar of 58.91. Now again, respectively, the ceasefire gap back over here, back on April 7th, that's the only thing that anybody should be looking to for a wider view for a downside move for your wave 4. That's it. Now come into this, right? Come into this, and I'm going to move here and go on to the year-to-date. Year-to-date. Give me the daily year-to-date. Oh, hang on. Sorry. A little bit stupid. All right. As our RSI, over here on April 17th, peaked 94.20. This was 1,000,000% supportive, as well as the landing of where we got to for my decision to get short in various positions going out to May. Got fucked on Intel. June is coming. I'm going to get fucked on Intel again, the original Intel. Going out to all of those names that I got involved with individually. My technical setup was 1,000,000% spot on. And I got run over. I got run over by AI. Because when you take it out, and I'm not smart enough or educated enough to be able to go and rip out that data, I've come across it, I've looked over it, it's supportive. If you remove the AI names, the S&P is dead flat over the bounce from March 30th. Dead flat. But your AI names way more, so they did what they did. So again, anyway, that is where I got my trigger, was getting my 94.95 overbought on my daily. That's it. I'm going out. I'm buying 2, 3, 4 months. I'm good. Here we go. Let's go. And I got run over. So again, where I'm looking at, for me, from a bigger, broader, wider view of things, and the way this video game kind of plays out when you look at it, 58.91. Now, I'm not telling anybody to go out there and buy 58.91 puts. No. But 58.91 is what I'm looking for a downside. And when you come into it and you start looking at it from a gap point of view, okay, only looking at gaps, and only going back to the tariff lows of April 2025, I get half the gaps, roughly. But I do not get the attack on Iran gap. That's a little bit lower when we initially attacked Iran. I do get Jackson Hole. Jackson Hole already got filled way back here when we had our dip going here into March. We will finally get minus 10% on that type of recline. But again, I'm looking for something down there in that, like I said, 5891. 5881 is where 2024 closed. So there's a lot of things that fit, but you know, again, you can make anything fit. All you got to do is come up with an argument for it, and it's going to wind up fitting. So I will leave you off with that and finish you out with the NQ, which I've seen a couple dozen of you now absolutely loving it, and the simplicity, like I've shared, of looking at it from the view of how we have deciphered it. You're going to miss out on 100, 150 points. All right, you're not going to get the perfect entry because you're brand new to it, but you see the way how it respects the pivots that I'm giving and the pivots I'm providing, that if you are trading off of those pivots, you are going to bank like, you know, Nancy, like a lot of other guys out there that I've spoken to over the weekend. But the one specific that I want to talk about is Anthony. You know, you are going to see this over the course of the next couple of weeks as being 10 times bigger than what you were doing with the ES. So enjoy that. But no, pivots are all the same. Again, looking at it from your entry, your exits, where your triggers are. Didn't have anything there on Friday, just a mishmash, wish-wash. But looking over here at the QQQ, and again, you know, having to zoom out a little bit so that you can see it all. Yeah, again, as we got that bounce, right on up there on the QQQ. We got right on up here into that 610, 615, 620 area. That was me. That was my trigger right there around April 17th as we were going in. Right up here is where April 17th took place at 643 where the fake print was. And then I just got run over. Run over by the AI stocks on the QQQ. But your gaps, looking at it from your gaps point of view, now that we have reached 735, we are attempting to embark there on that 742. Your gaps come down, and the only thing from a short term talking about June 18th. Thursday, June 18th being quad OpEx in a shortened week with a holiday on a Friday. Quad OpEx, June 18th. The only thing you should look at is right there around that 700 area. Maximum. Nothing lower than 700 if you're going to look out there to June 18th. And just to come over here and have a quick look, I don't want to share account details on this because I have the platform up and running, but June 18th, looking at the 700 puts, which are not here on the filter, but anyway, you'll get a chance to go out there and look at it. I'll put it in the email. 700 is as low as you want to be looking out there to June 18th. So with it up here at 740, looking down there at 700, quite obviously that's a 40-point move to the downside. Anybody with a little bit common sense would be sticking to that 730 area. 730, 740. If it drops down to 700, great. But those who are going to go down to 700, your theta decay is going to eat up all your premium. By the time it gets down there to 700, middle of June OPEX week, trade ain't worth a shit anymore. So be careful about that. Again, over here on the NQ, looking at it from your 15-minute chart, the Trump tweet, Trump announcement coming out there on Thursday. Wham! Everything confirming the bullish look, coming down to 29,782 perfectly overnight over there on Thursday. Boom, 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 boom. Nothing but mishmash wigwag over here into the end of the trading day on Friday. But from a big point of view, once again, looking at your NDX, that is one of the biggest sell divergences you will ever see. But doesn't matter. Doesn't matter until price takes over, because again, having gotten up here to overbought above 95 back here on April 17th, I thought, here we go. Once again, I am going to lead everybody to the promised land like I have done for over a decade. And I got fucked. I got fucked by AI. I got fucked by how the rhythm changed on this music play to the upside. And there is nothing whatsoever that I can do about it except who gives a shit about yesterday, because tomorrow is a brand new day, and that's the only thing that we need to be dedicated to.
Imagine if you wake up every day with $84,600 in your bank account, and every day at the end of the night it's gone, whether you wasted it or not, and then the next day you get another $84,600. You would do everything in your power to spend it, because you know the next day you're getting $84,600. You don't want to leave nothing there. You'd make the best of it, right? You get 84,600 seconds. Why waste time? It doesn't carry over to the next day. It doesn't earn interest. Take every day and every moment and make something of it. Make something positive.